Yo, what's up you guys? Welcome back to a new video. In today's video, I'll give you an update on the current situation that we have in the market, and we're going to take a look at the dollar index as well as some indices, precious metals, and some FX pairs there as well. We are going to look at some fundamental information as well as technical information as well, and look for the best probability setup that we do find. Don't forget that I'm giving away the HFT system, which allows you to pass accounts with prop firms, that allows the use of the passing of HFT systems. You just need to be subscribed to the YouTube and then head over to Instagram. Just make sure you follow. It's that easy. Like, you don't have to do anything other than that. In any case, today is Friday, so happy Friday to all of the beautiful people. Let me know what your plans are for the weekend. If it's some dodgy plans, you don't have to tell me, but let me know in the comments below what are you gonna get up to, and that is it. So without any further ado, let's jump straight into the information. First, gonna look at some fundamental data. An article from CNBC is reading. This is related to the stock market. It says here, stock futures fall after latest batch of earnings. And then it says live updates, but we know this is not a live update because that was live yesterday. So this is just an update. Basically, how this works is that you've got a lot of companies out there who tell us about how they are doing, which is kind of, if you work in a managerial position, it's kind of like your weekly briefings where you are called into an office and you need to explain what have you done this week, what your performance look like, how's it been going, and that's solely depending on how much money that particular role or position or that company that you work for might have accumulated in profit for that week. Now, these companies are all listed on the stock market, like the JSE we've got in South Africa. This is the Nasdaq and the S&P 500, as well as the Dow Jones, which is basically mostly focused on industrial, in the industrial section. The Nasdaq mostly focus on the tech sector, and then you've got the S&P 500 there as well, just making it broader. You do however need a bigger capital market cap to be on the S&P 500. Now, this basically gives us an indication of companies that have reported their earnings. How well did we do in Q1, in quarter one? Did we do good enough? And as a result of this, there's normally that ripple effect that takes place in the stock market. Now, it's important to always monitor and focus when these data come out, which is why I don't focus normally on trading stocks or indices in particular in the week or in weeks where there's high impact news, depending on the company that releases the data. As we know, some companies weighs more than certain companies. Like Apple, they are the giants in the industry, so they weigh a lot. Apple, Amazon, Tesla, Alphabet, which is Google, they are the four of them. Then there's one, I just can't get to it. They weigh almost, I think, about 10 or 20% of the Nasdaq. So if they get affected, you know what's gonna come. But in any case, don't take my word for it. Let's jump into the data. It says here, US stocks futures fell on Friday. I don't know. I think they forgot to put up that wet sign in, because now the stocks fell on Friday as investors digested the latest round of corporate earnings, including data from Amazon. It says here the Dow Jones fell by 108 points, or 0.3%, and the S&P 500 and the Nasdaq, they both fell 0.3%. It says here Amazon shares were down 1%, so Jeff Bezos is not going to be a problem for him. It says here after initially rising following the online retail's first quarter results. Meanwhile, Snap tumbled 18% in extended trading following a revenue miss. Pinterest, Pinterest. I normally read it like that, like Pinterest, but now I see it's Pinterest. Well, I don't know. In any case, their shares fell 14% after issuing a disappointing second quarter. I believe that was load shedding. No, not so. Any case, I think let me just check. Yeah, it's not charging anymore. So basically, yeah, so we've got load shedding to deal with here in South Africa as well. Any case, so we understand now, or we kind of gather information, and we can already determine that we've got a bearish outlook for the stock market as it is now. If you're going to take a look at gold, it says your gold set for monthly gain on economic whoosh as the Fed's as investors are eyeing the Fed's meeting. Now, you know the meeting is taking place next week, Wednesday, which is the most important news event that takes a lot of traders from million to zero on the MT4 demo account that they are using. But let's not go there, right? It says here gold prices were poised for a second monthly gain on Friday, which is weird because if I look at the price action on gold, it hasn't moved for the entire week. And I've said this before, that they're waiting for the Fed's meeting to understand how the interest rates will be adjusted, what the Feds are going to be speaking about there as well. Now we're going to take a look at the technical information now, expecting a bearish outlook for the stock market and a continuation in terms of the bullish outlook purely based on the data that we received for the dollar index yesterday. So if we have a look at the news events that had taken place this week, firstly, we had on Tuesday, we had the consumer confidence that came through, came through lower than anticipated. Again, last week consumer confidence was high. This month, this is low. I think the consumers are also getting confused now. We also had the advanced GDP information that was released at a negative 1.1%, which is the gross domestic product, basically, quarter over quarter, which was quarter one. That's what QQ stand for. And then we've also had unemployment claims, which had dropped, which was good to see. It just means less people are filing for unemployment. And if you look at the previous report, we can see that increased, and then now it kind of coming down. Today we've got core PCE and we've got the employment cost index quarter over quarter and month over month, which is MMM and QOQ, and then that basically paid tips off Friday. But next week is probably, it's one of those weeks where you tell people stay away from the market, right? Don't enter the market, don't trade. People are like, don't tell me what to do. It's like, don't touch it, and then they go, okay, but I want to see what's gonna happen. So next month we've got the ISM PMI, we've got the job openings, we've got ADP automated data processing, we've got the ISM services PMI purchasing managers index, we've got the FOMC statement, Federal Reserve Committee coming together and talking to us about what the outlook is for the economy. We've got the interest rate, which is forecasted to go up by 0.25% from 5%, and then we've got the press conference where Powell basically goes in front of some journalists and answer a couple of questions, and then we've got another report for the unemployment claims. And then on Friday we've got what made a lot of people millionaires using an MT4 management system in South Africa. We've got the NFP, we've got the Treasury currency report there as well. So a very busy week for the index going into next week. So please be careful on there as well. Now, if you go back to the dollar index, now if you remember, I spoke about the index the last time, and I said we can expect the market to obviously complete this inverted head and shoulders. Now, sometimes when you see an inverted head and shoulders inverse, and someone's gonna ask, not inverted, it's inverse. Yeah, so it's fine. But the left shoulder doesn't always need to be equal to the right shoulder, but we had that pattern took place over there. And again, that is the target, the long-term target for the index, and I do that expect the market to continue higher. We will be faced with new structure. If you see over here, this structure over here will be the deciding factor of whether or not the index will reach this level over here. As you can see, this level over here acted as a level of support. The market broke below that, came back, tested it as resistance. The resistance did not hold. The market broke above resistance, came back, tested as support. Support did not hold. Market broke below previous support, came back, tested it as resistance, did not hold. Came back to previous resistance, did not hold there as well. Came back, broke below this basically because this was a structural level here, broke below that, giving us that bearish sentiment, and then the market just came back and started this move to the upside. Now, based off where we are now, I do expect the market to continue higher. There is no question about that. My main question basically is just that we need to see a break past this level for this continuation to the upside, in order for the market to drive the price higher. For now, I do anticipate the market to go to that level and then potentially a pullback and then a continuation to the upside. So if you are long on the index, then you are okay to go forward, to proceed, because the market is most likely gonna start that range as we head into next week, awaiting the important interest rate data. The Nasdaq, if I see here, just looks to be very bearish. We do however have this gap, looks like a gap over here that we received. Yeah, we got a gap here, and this gap was obviously due to the negative, almost at negative ions. See what happens when you watch too much Shark Tank. Anyways, this for me looks bearish from the back of the end. This looks like we can expect this move. This is on the 4 hour, but I do expect this market to go bearish, close bearish today, and then obviously because it is stuck within this range, right? It is stuck in this range, so I do expect the market to continue this, obviously. So I do expect the Nasdaq to go lower today. However, if you are looking to get into this market, I would suggest that you would obviously, yeah, it's a good time to be alive. Okay, so definitely a move down on the Nasdaq from where it is now. Next up, we've got what's this? The Dow Jones US 30. Also, for me, this price is kind of this level here, making it quite difficult to make a substantial indication, because we have a resistance got broken, tested it as support, broke below support, resistance didn't hold, came back. I always want to say it looks like a dinosaur, a T-Rex head and shoulders shear there. So you got a right shoulder, you got a shoulder, top of the shoulder, and we kind of have this here, kind of doing that. I do, however, would not say I anticipate this move to take place, because it could potentially be a move to the downside also. But let's not be predictive and let's just be reactive, because we always need to learn to adapt to how the market changes its momentum. So I would say from where we are now, there's two ways to go about this. If the price action starts to develop bullish, then we can expect it to go higher. Alternatively, a break below this level will just make way for the market to continue lower. We've got gold over here. Now, gold hasn't moved ever since it came into this level, right? It's got a lot of liquidity over here to the upside. What I want to bring your attention to is this, which is very interesting, right? I'll explain something to you that's very interesting at the moment. You can see that the market obviously had a massive bull run, and then the market came into this level on Monday, the 17th of April. And you can see there 1, 2, 3, 4, 5, 6, 7, 8. It's been 2 weeks now. Okay, gold has not made any move as of yet. However, I expect this to continue until we get the interest rate decision coming through on Wednesday, right? Next up, we've got Euro USD. If you remember Euro USD, I made the breakdown, and we are expecting this market now to move lower as we're expecting an increase in the value of the dollar index there as well. So a move down, yeah, this is expected, and then from there we can obviously start monetizing, monitoring the price action on here as well, for the market to continue that move to the downside, as we anticipate the index to also increase in value there as well. So guys, that is it from my side. I'm going to add another service for people that had asked me to send more high probability setups. I'm going to add another service on the website that you can purchase, where we'll send about between 1 to 4 between 2 to 4 high probability setups every day. Yeah, that is it from my side, guys. Thank you for your time, and as always, cheers for ears.